Here is a question we hear almost every week. I earned that money overseas. Surely the ATO does not need to know about it. I am Benedict Yoon, tax lawyer at Australian Tax Experts, and the short answer is, if you are an Australian tax resident, yes, they do. In this presentation, we will look at who counts as an Australian tax resident, what overseas income has to be declared, what happens when you bring money into the country, how the ATO finds out, and what to do if something has not been declared. Let us begin. 4 numbers frame everything that follows. 100%. If you are an Australian tax resident, all of your worldwide income is assessable here, wherever it was earned and wherever it is held. 4. The number of tests that can make you an Australian tax resident, and you only need to satisfy one of them. 100 plus. The number of jurisdictions that automatically share financial account information with the ATO under the Common Reporting Standard. Your foreign bank already reports on you. And 80%. The penalty reduction that can be available if you disclose undeclared income voluntarily before the ATO comes to you. Keep that last number in mind. It is the difference between a manageable correction and a very expensive one. Let us deal with the misconception head-on. The myth: income earned overseas, or money sitting in a foreign bank account, does not need to appear on an Australian tax return. Plenty of people genuinely believe this, particularly migrants who earned the money before arriving, or Australians with accounts left over from time abroad. The reality: Australian tax residents are taxed on their worldwide income. It does not matter where the income was earned. It does not matter where the money is kept. And the consequence: undeclared foreign income is one of the most common triggers for ATO audit activity, and the penalties can be severe. If you are an Australian tax resident, it never came to Australia, is not a defence. So the threshold question is residency, and it is a legal test, not a passport check. There are 4 tests, and satisfying any one of them makes you an Australian tax resident. The resides test is the primary test. Do you actually live in Australia in the ordinary sense of the word? Your home, your family, your routine. The domicile test: if Australia is your domicile, broadly, your permanent legal home, you remain a resident unless your permanent place of abode is overseas. The 183-day test: if you are physically present in Australia for more than half the income year, you are generally a resident, subject to exceptions. And the Commonwealth superannuation test, which captures members of certain government super schemes posted overseas and their families. 3 points people often get wrong. First, immigration status and tax residency are different questions. You can hold permanent residency for immigration purposes and still be a non-resident for tax, and the reverse is also true. Second, moving overseas does not automatically end your Australian tax residency. Under the domicile test, an extended stint abroad can still leave you an Australian tax resident, especially if you keep a home, family, or financial ties here. And third, there is a carve-out worth knowing about: temporary residents. Holders of certain temporary visas are generally exempt from Australian tax on most foreign income, other than employment income earned overseas while they are a temporary resident. If any of these grey areas sound like your situation, residency advice is the place to start. If you are an Australian tax resident, what exactly must go in your return? In short, everything. Foreign employment income, salary and wages earned while working overseas. Foreign rental income from property held abroad. Interest on foreign bank accounts, and dividends from shares in foreign companies. Foreign business income, where you carry on a business overseas, and capital gains on the disposal of foreign assets, property, shares, or anything else. If it would be assessable had you earned it in Australia, it is assessable when you earn it overseas. The location of the income does not change its character. Declaring foreign income does not necessarily mean paying tax twice. 3 mechanics matter. First, conversion. Foreign income is declared in Australian dollars, converted at the exchange rate applying when the income was derived. Second, the foreign income tax offset, or FITO. Where you have already paid tax overseas on the same income, Australia's offset rules generally allow that foreign tax to be credited against your Australian tax bill. You pay the difference, not the double. And third, tax treaties. Australia has agreements with more than 40 countries that allocate taxing rights between the two jurisdictions, and they can change how particular types of income are taxed. The system is designed to prevent double taxation, but it only works if the income is declared in the first place. What about actually bringing money into Australia? Here is the key distinction. The transfer itself is not a taxable event. Moving your own savings into an Australian account is not by itself taxed. But the source of the funds matters enormously. If the money represents income earned while you were an Australian tax resident and it was never declared, it remains assessable, no matter how many years ago it was earned or how long it has sat offshore. Income genuinely earned before you became an Australian resident is generally not assessable here. But that analysis needs care, and it is one of the most common situations our office handles. And remember, AUSTRAC reports international transfers, and the ATO routinely data matches large inflows. A big transfer with no explanation is exactly what triggers the Please Explain letter. You might be wondering how the ATO would ever know about a foreign account. The honest answer? They probably already do. Under the Common Reporting Standard, more than 100 countries automatically exchange financial account information with each other's tax authorities. Account balances, interest earned, dividends received. That data flows to the ATO every year without anyone asking. AUSTRAC captures every international money transfer into or out of Australia, and that information is data matched against tax returns. And bilateral tax treaties allow the ATO to obtain records directly from foreign revenue authorities when it wants to dig deeper. The days of offshore accounts being invisible to the ATO are effectively over. So what should you do if you know or suspect that foreign income has gone undeclared? 4 steps, and the order matters. First, review your position. Identify the foreign income, accounts and assets that should have been declared, and work out which years are affected. Second, correct prior year returns. Amendments can often be made before penalties escalate. Third, and most importantly, consider a voluntary disclosure. Disclosing to the ATO before they identify the issue can reduce penalties by up to 80%. Waiting for the ATO to contact you removes that option entirely. And fourth, get specialist advice. Residency, source and treaty questions are rarely straightforward, and the right analysis can change the answer completely. This is core work for us at Australian Tax Experts, where tax lawyers and accountants work as one team. We run foreign income reviews, assessing your residency position, your income sources, and your reporting obligations across borders. We fix past returns, preparing and lodging amendments and corrections for prior years, properly and completely. And we manage voluntary disclosures, prepared, lodged, and negotiated with the ATO by specialists who deal with these cases every day. If there is overseas money in your history, we can tell you exactly where you stand, confidentially and before the ATO forces the conversation. If you have overseas income, foreign bank accounts, or assets held abroad that may not have been declared, contact Australian tax experts today for a confidential assessment of your position. Visit australiantaxexperts.com.au/contact. Thanks for watching, and remember, this presentation is general information only, not personal tax or legal advice.